Risk assets hit as evidence grows of a second spike in coronavirus cases in the US. So guys, what's been going on? So today we're seeing risk off in the market. So risk assets under pressure. So that includes, global stocks, AUD, NZD, CAD, crude oil markets, all being sold off quite heavily today actually. And on the other side of the coin, havens are bid. So USD, JPY, CHF, government bonds as well, all being bought, people flooding out of risky assets and into safe havens. Why? Well, it seems as though this Bloomberg article that was doing the rounds last night and this morning has really spooked markets. So this Bloomberg article basically was citing some data in the US that shows that in some states like California and like Texas, we're actually seeing an increase in the number of coronavirus cases. And why is this important, guys? Well, pretty much, as you all know, risk assets since mid-March have been rallying pretty hard. Very, very impressive, the comeback that risk assets like stocks and AUD, NZD and all of the ones I've already noted. Very impressive, the comeback that all of those assets have made from being hit so bad initially in the coronavirus pandemic. But there's one assumption that has been underlying that rise in risk assets, and that was that the rate at which coronavirus is spreading was slowing down in key markets. So the fact that Europe was getting the virus under control was a big help. The fact that New York, which was the main hotspot in the US, was getting the virus under control was a big help. The fact that, in the UK, Australia, New Zealand, you name it, developed markets were seen as getting the virus under control, which was allowing their economies to reopen. But now we're seeing that fundamental assumption for this risk rally being undermined by this latest data coming out of some of these US states. So guys, going forward, it's going to be crucial to watch the state-by-state data in the US. Keep your eyes on California, keep your eyes on Texas. Some of the other southern states not doing so well as well, like Florida and a few of the other ones. It's going to be very, very important to watch this trend because this really could be the thing that smashes risk assets, if anything. Forget about US-China tensions. A coronavirus second wave is not what markets want to see. That is pretty much it from me for now, and I'll see you in the next one.